What's up guys, Christos here and welcome back for another video. And as you can see in this video, we are going to be getting into Disney's Q2 earnings. I'm going to give you my first initial reaction to these earnings, what I think about them, what I think for the company going forward, and what I'm actually going to be doing with my investments after hearing these earnings. And we're going to be doing all that right now. So if that interests you, hit a like on this video down below and let's get started. So moving on to the overview of the earnings, and let's just go through them. You may have seen them already, but main highlights of these earnings was that earnings per share actually beat the estimates, which was a really good positive news. It was 79 cents versus 27 cents expected, which was quite a decent beat there, but revenue just missed by such a fraction. But the main highlight of this earnings call was the thing everybody was looking at, and that was the streaming numbers. And unfortunately, Disney missed by quite a way on this. The company missed on subscriber estimates for Disney Plus, coming in at 103.6 million paid subscribers when it was expected to post 109 million subscribers. And this is what has got the people talking. I had an inkling that this was going to happen, and I'll get into that why in a second, and I'm not too worried about it, but we'll leave that for a second. But one thing I have to say is there has been a little bit of a instant reaction in the market to this stock. We are now trading at almost 4% down after hours. This is at 5:14 p.m. Eastern time in the United States. What's going to happen pre-market, I don't know, of course, but the initial reaction has been a little bit of a sell-off. Very much people panicking, but for me, like I say, we'll get into that. Conference call highlights. So I just sat down and watched the conference call, or listened to the conference call, and there were some really good things that I heard in that, but basically main highlights was Disneyland Paris and Anaheim was shut throughout the entire Q2, so a lot of that affects these earnings, of course. The executives over at Disney are extremely pleased with the Disney Plus price increase that they made this year. They don't believe that there was too much of a turnover in terms of people leaving the platform and people joining the platform, which was really good. So it seemed to be a bit of a stable price increase. They still say on the earnings call, they still said this, they think Disney Plus is way on target still for 230 to 260 million subs. That's meant to say million, not just 260 by 2024. That was something I covered heavily in the video I did when I said I was buying Disney stock. So that was really pleasing to hear for me. Another thing that they touched on during this conference call quite a bit was the Disney Florida park received some positive CDC news about wearing masks outside. So what they have said, if you have been fully vaccinated, you can resume activities without wearing a mask or staying 6 feet apart, except where required by federal, state, local, tribal or territorial laws. At the moment, Disney have a local rule saying that no matter where you are in the park, you have to be wearing a mask. But one thing that they said they're going to be looking at now in Florida is the use of, if you are vaccinated, of course, you don't have to wear a mask outside, which is obviously quite positive news, because I can't imagine the thought of wearing a mask in the middle of that Florida summer heat outside. It can't be too pleasant. But the other really good thing that they spoke about during this conference call was securing multiple long-term rights for different sports stations on their ESPN network. So it says Disney ESPN secure key sports rights deals, long-term agreements signed in the past 6 months. Just a couple to note here. Obviously, we've got NHL, NFL, but the one that really stood out to me, being a soccer/football fan, depending on where you are, is the La Liga coverage, which they've secured for 8 years. So that was quite exciting to see that they had done that. So yeah, they were the conference call highlights for me, the main ones that I picked up on, the ones that I managed to make time to make notes on. There was, of course, a lot more than that, and there were lots of questions as well. If you wanted to go and actually check out the full live stream, obviously go over to the Disney Investor Relations page and you can obviously see the whole thing there. Just moving on to the post-market reaction. Again, as you can see, we have seen a little bit of a harsh reaction to these mixed earnings. Like I said, it wasn't a complete miss, but the main thing that people were focusing on was the subscriber count, because that is what everything Disney is about at the moment. And obviously, if they miss, this is going to react like that. But I personally think it is a complete overreaction, and that's why I am telling people to stop worrying. I am not worried at all, and I'm going to get into that right now. So let's start off with Disney Plus for a starter. Number one, these are very, very similar to the results that Netflix have just posted in their earnings. They missed their subscribers as well. As you can see, it says Netflix adds 3.98 million new subscribers in Q1, sharply missing expectations. What it says down here is that they hit 3.98 million in net paid subscriber additions when they were expected to hit 6.29 million. So the trend for streaming services is probably quite similar across all of these right now, and there's many reasons why that is happening. Of course, people are starting to go out more. People are sick of being in their houses. Remember, the last couple of years, or the last year and a half at least, we've been sat in our house watching Netflix, watching Disney Plus. I think we need a little bit of a break from it, but it's always going to be there. It's always going to come back. So I think obviously these earnings in this quarter is going to be very similar to all the different streaming services, but I don't think it was nowhere near as bad as Netflix. The next thing that I want to touch on, and I think this has kind of gone under the radar a little bit. I know this was reported about a month or so ago. This is the first time that Disney has hit 100 million subscribers, guys. This is a company that has been about for 16 months. As you can see, this article here, Disney streaming service hits 100 million subscribers. That is just insane. When you think about it, this company has been around for 16 months. It took Netflix 10 years to hit this milestone. And I just think this has kind of gone under the radar a bit. I know this isn't part of the Q1 earnings, but the way I look at this, yes, they missed their subscription estimates, but let's not take away the fact that they have gathered 100 million subscribers to their platform in just 16 months. I think it's absolutely incredible. And this earnings call didn't really matter too much to me in terms of the subscriber count because I'm so long term on this company. Another thing that I picked up, and they actually mentioned this in the earnings call, was that because they announced that they hit 100 million subscribers in March, the end of March 2021, that means they had a month to hit 103 million subscribers is what they did hit. This is much faster growth than the previous 2 months of that quarter, without any kind of real thing happening to actually push those sales up. So I personally think this is really good news that this happened. Like I said, they didn't even really have a meaning or an answer as to why this happened, because they said they did no extra pushes, no big releases to push those figures up in that month. It just happened, unless I missed anything, of course. And then the other thing I just wanted to touch on once more is that they said in this earnings call they are still extremely optimistic to be hitting the 230 to 260, I did it again, million, let's just type it in this time, million subs by 2024, which is an absolutely amazing achievement. And the fact that they still said they were confident on doing that fills me with confidence as well. So that's Disney Plus. That's why I don't think we should be as worried about these earnings and this subscriber miss. I want to just touch on the parks. It's not as much, but number one, the parks are still returning to full capacity, guys. This is probably one of the main causes why they missed their revenue. We are still coming up to full capacity. We're still coming up to operations, and like I mentioned, restrictions are easing. Masks on people's faces in that Florida heat is definitely going to be on people's minds when deciding if they're going to go to a Disney park or not. And the fact that they have acknowledged in this earnings call that they are now looking at this CDC news and these guidelines, and they're going to be reviewing them, I'm pretty sure they're going to be allowing people to wear no masks if they have been vaccinated in the summer and outside. So I think that's another reason to be positive about this and people returning to parks and being back to normal. And the other thing that they mentioned in the earnings call was that the ticket demand is in line with pre-pandemic levels. So the people are ready, the demand is there, people want to get back into Disney, and I just personally think that by the end of this year we're going to be in full flow with this with these parks and stuff like that. So when it comes to looking at the next earnings call, I think that's going to be a really good guideline on how the year is going to finish as well. This one, like I said, I'm just put on this slide here. I think Disney have found themselves in a really tricky COVID situation because you've got people wanting to go out more, people that have been stuck in their houses for the past year and a half, or however long it's been. So they're not going to want to watch Disney Plus. The Disney Plus demand is losing, but also there are so many restrictions at the parks. People don't want to go to the parks because obviously they want to enjoy the full experience. And I just find ourselves, we've got two massive revenue earners for Disney here that just seem to have the seatbelts put on right now because we're in this small, tricky transition period coming out of this pandemic. I just feel that both of these revenue streams are getting affected during this transition period. So that's my thoughts, and that's just a really good point, I think, on why we have seen this mixed earnings this month with Disney. So just moving on, one thing I just wanted to put here, listen, when I posted my video about a week, 2 weeks ago on Disney stock, I think it was about 2 weeks ago, why I'm buying it, it was always long term. I knew that with the Disney subscribers, if they were going to miss the subscribers, of course the stock is going to drop. It is the main thing. It's the main thing that I spoke about. I think just looking at this stock over the past few years, it used to be considered as a value stock. Right now, it feels very much like a growth stock depending on earnings because it beat its earnings, it just missed on its revenue, but then it missed on the subscribers, and based on the future growth of this company and the results reacted just the way they have done in the post market and stuff like that. So stay in it for the long term. If you're in it for the short term, I have no advice for you because I don't know how to do short term investing or anything like that. So just moving on to what the play is for me. So today, I'm not afraid to admit I did buy Disney just based on the recent market crash. I thought I was getting it at a very good value. It has now dropped down to 171-ish. So I have lost a little bit on these orders today. As you can see, there's some TTCF mixed in there as well. But I'm not panicking at all. Am I going to invest in this stock tomorrow? I actually wish I could. I need to reevaluate my finances because today filming this video, there was actually a few more than this. I think I spent around £2,000 on stocks today, which was quite a lot for me. So basically what I'm going to do is take a look at my cash position in my portfolio tomorrow and potentially add some cash if I can find some free funds, of course, because I'm not going to sell any other stocks to make for this investment because all of them are down at the moment and I want to hold on to them. But I will invest in this a little bit tomorrow. I think it's going to stay well under 175. I think it could potentially drop into the 160s tomorrow, all depending on other market news. But I'll probably add maybe 3 or 4 shares tomorrow, depending on how much money I can find and allocate to this. So that is basically what I'm doing. In terms of just wrapping up my outlook of this stock, this earnings call, nothing has really changed for me, guys. I'm very much in it for the long run. I think it's absolutely amazing that they hit 100 million subscribers in 16 months. Obviously, we already knew that before this earnings call. Earnings beat, revenue just missed, but there are so many different reasons as to why that probably happened, and so many different variables, and it must be so hard to actually estimate what they are actually going to make with all these different restrictions in place. But I have no worries about this stock at all, even though it was a mixed bag. And like I said, I'm in it for the long run. If you're in it for the short run, then God help you. But if you're in it for the long run, just stick with it, add to it while it's on sale wherever you can, and hopefully in the long term we're going to make lots of money. So finishing the video there today, guys. Obviously, if you haven't gone and grabbed your free share from FreeTrade, make sure you go and do that right now. Apart from that, like this video, subscribe to the channel if you haven't already, and of course, may the force be with you, and I will see you in the next one.